Welcome. In this video, will ZBCN coin heart attacks come? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
The chart clearly shows a long-standing upward price trend. This trend reflects market participants' confidence in and support for the asset. Each time the price touches this rising trend line, it reacts upward, indicating that buyers are strongly defending this level. Recently, as the price once again approached the support level, another upward movement occurred. In technical analysis, this is considered a highly positive development, as trend lines are not only a reflection of past movements, but also serve as signals for potential future reactions. Rising trend lines typically represent positive market sentiment and the sustainability of demand for the asset. Each touchpoint marks where buyers step in and view the dip as a buying opportunity. Therefore, each approach to the trend line can trigger a potential upward move. Just as in previous instances, it is likely that the price may once again react positively. Buyers who previously entered positions at this trend line may be inclined to do so again in the same area. If the price pulls back toward this rising trend line in the coming days, it is reasonable to expect renewed buying pressure from a technical standpoint. This line is not just a technical formation, it also represents a psychological threshold. Traders and investors monitor this area closely. The belief that a setup which worked in the past could work again influences investor behavior. This leads to increased trading volume around the trend line and sets the stage for another upward price move. A new touch of the trend line, especially if supported by volume, could result in a strong bounce. The potential upward move that follows might not only be a short-term correction, but could also mark the beginning of a new uptrend. Market participants often see reactions from reliable support levels as opportunities to open new positions. Therefore, if the trend line holds, the price may not only stabilize, but also have the potential to test higher resistance levels. When analyzed over larger time frames, trend lines also come into the radar of long-term investors. Maintaining this line is strategically important not only for short-term traders, but also for those who position themselves on a weekly or monthly basis. Consequently, if the trend line continues to hold, it may attract increasing interest from investors over time, thereby adding upward pressure to the price. Large investors do not overlook strong technical structures like this. Thus, each bounce from the trend becomes more noticeable. Additionally, in periods where overall market sentiment is positive, such patterns tend to generate more reliable signals. If macroeconomic data, sector developments, and investor perception are generally optimistic, each touch of a rising trend line is met with stronger buying pressure. In technical analysis, the continuation of such strong upward trends often results in the formation of new highs. Continued movement along the rising trend line strengthens the structure and increases its perceived reliability among a broader investor base. Currently, we observe that the price has initiated another upward move after its most recent contact with the trend line. For this move to continue, it is important to see increased volume support, sustained positive market sentiment, and the participation of new buyers. If the price returns to this trend line again, it is likely to find support there once more as it has in the past. By analyzing how quickly and strongly the price previously reacted after touching the trend line, one can anticipate the possibility of a similar scenario unfolding again. At this stage, what matters for investors is how the price approaches the trend line, the volume profile in that area, and momentum indicators. If the price approaches the trend line with slowing momentum, this is often interpreted as a correction and increases the likelihood of a bounce. In contrast, if the price drops sharply to the trend line, it may occasionally break this support. However, in the current scenario, previous contacts with the trend line have yielded positive outcomes, and the market is interpreting this constructively. In conclusion, the technical setup suggests that the upward trend remains valid and the price continues to find support at the trend line. As long as the structure remains intact, that is, unless the price closes decisively below the trend line, the existing uptrend remains in effect. Therefore, if the price returns to the trend line, expecting a similar upward reaction is technically reasonable. The setup can confidently be described as a significant support level that reinforces confidence in the asset and sustains the upward momentum. But we can't base decisions solely on trend analysis. Let's take a look at other metrics as well. Stay tuned.
One of the commonly encountered structures in technical analysis of the markets is the cup and handle pattern, a classic formation that provides strong signals about the potential future direction of price action. This pattern typically appears within an uptrend and is a highly effective price structure that attracts investor attention. In the currently analyzed chart, a similar formation stands out. On the left side of the observed pattern, there is a broad and gently sloping price decline, followed by a recovery that completes the cup portion. This process indicates that the market experienced a period of selling pressure, but then managed to recover back to previous levels. Once the initial phase, the cup portion of the formation, is completed, the price typically pauses, consolidates, and begins a smaller scale correction. This correction phase is called the handle. The handle is usually completed in a shorter time frame than the cup and involves a more shallow pullback. In the current chart, the price appears to be in the handle formation stage. This phase is critical for investors as a healthy completion of the handle significantly increases the likelihood of an upward breakout. The handle usually develops within a narrow horizontal or slightly downward sloping channel. Once the upper boundary of this channel is broken, the formation is considered complete and the potential target becomes much clearer. The most notable feature of the cup and handle pattern is its ability to produce sharp price moves once the breakout occurs. This breakout typically marks a region where strong buying emerges, momentum increases, and trading volumes begin to rise rapidly. In the current pattern, the handle phase appears to be nearing completion. If the handle develops within a tight range and low volume, this generally suggests that the subsequent breakout could be stronger and more decisive. Therefore, investors should be particularly vigilant during this phase and prepared for a potential sharp move following the breakout. The price target of the formation is usually calculated by measuring the depth of the cup and projecting that distance upward from the breakout point. This means the vertical distance between the bottom of the cup and the resistance level at the top of the handle represents the target level after the breakout. Such symmetrical projections and technical analysis provide clear and concrete guidance for investors when determining potential price objectives. However, not only the presence of the formation, but also volume analysis, momentum indicators, and the overall market structure play a determining role in whether the target is achieved. In the analyzed chart, the price appears to be going through a healthy consolidation process in the handle phase. This represents a period where short-term profit-taking occurs and new buyers cautiously begin to open positions. If the price breaks above the handle's resistance level after this process, it indicates that the formation has completed and the upward move has begun. Such breakouts are usually swift and aggressive, as many traders tracking the technical formation interpret the breakout as a buy signal and begin entering positions. Additionally, psychological factors also play a significant role in the strength of the cup and handle pattern as a bullish signal. The prolonged decline in the cup and the subsequent recovery show that investors have regained confidence after the downturn. The brief correction in the handle phase suggests that most investors are no longer heavily influenced by the prior decline, and that selling pressure has diminished. This psychological balance results in an upward surge at the point of breakout, as both the technical structure and investor sentiment align. In some cases, cup and handle patterns may fail, or the handle phase may drag on longer than expected. In such scenarios, investors need to remain patient. As long as the price does not fall below key support levels during the handle formation, the pattern remains valid. In the analyzed chart, if the handle does not extend much further and breaks above the horizontal range, the pattern will be confirmed. In this case, the initial target is assumed to be equal to the height of the formation. However, the time it takes to reach the target can vary depending on overall market conditions, news flow, and investor interest. In conclusion, the observed cup and handle pattern in the current chart structure may signal an important bullish opportunity for investors. The handle phase should be monitored closely, especially the moment of breakout. While such patterns are considered highly reliable in technical analysis, decisions should not be based solely on the pattern itself, but should be evaluated alongside volume, momentum, and general market conditions. If the price surpasses the handle's resistance level, the pattern's potential target will become technically clear, and the price may accelerate its upward movement. In this context, the cup and handle pattern could be viewed not just as a technical structure, but as a concrete reflection of market psychology and investor behavior.
RSI is one of the most commonly used oscillators in technical analysis and provides extremely valuable insights for evaluating the strength, direction, and momentum of price movements. Currently, a particularly noteworthy structure can be observed on the RSI chart. This structure is a classic ascending trend, which in technical analysis is considered a reliable indicator and an early signal that price may continue to move upward. Especially when such rising trends occur on an indicator like the RSI, it signals that market momentum is strengthening and buyers are becoming increasingly dominant over time. The importance of this rising trend lies not only in the upward movement of the RSI value, but also in the potential for the price to respond positively as long as the trend is maintained. This is because higher lows and highs in the RSI often serve as a precursor to a similar bullish scenario on the price chart. Currently, a clear upward channel has formed on the RSI, and the RSI value continues to move within this channel, indicating that momentum remains positive. If the RSI continues to hold above this ascending trend line, it signals that buying pressure in the market is ongoing and that investor sentiment is increasingly positive. Respecting this RSI trend structure serves as a strong technical indicator that the price may also continue its upward movement. These types of structures are extremely valuable for both short and medium-term trading strategies. This type of rising RSI trend shows that the price has found solid support in a particular region and is steadily continuing its ascent with that support. For investors, this ascending RSI trend can also act as a potential signal mechanism. For instance, even if the price experiences a pullback, if the RSI touches the trend line and then moves back up, it may be seen as a buying opportunity. In this way, the RSI functions not only as a momentum indicator, but also as a kind of dynamic support line. The preservation of the structure signals that investor confidence remains intact, which in turn supports the upward movement of the price. Furthermore, if the RSI continues to maintain this ascending trend, it strongly suggests that price action will also move upward in parallel and reach new highs. Typically, when an upward trend forms in the RSI, it reflects similarly in the price. It has been observed that such rising trends in RSI are particularly effective at the beginning of a trend. In other words, before the price enters a new bull trend, this kind of structure in the RSI often acts as a leading indicator. In the current scenario, the upward structure seen in the RSI shows that investors' overall confidence in the market is increasing and they are eager to buy. As long as the RSI stays above the 50 level and maintains this trend structure, the potential for the price to move upward remains very strong. Movement of the RSI in line with this rising trend could lead the price to test previous resistance levels and possibly break through them to reach new highs. Such positive structures in the RSI gain even more significance when supported by volume. If the price rises while the RSI is also climbing and trading volume is increasing, it indicates a strong and healthy uptrend in the market. In these situations, confidence in the RSI trend increases, and technical analysts begin to shape their positions based on this structure. Also, as long as this RSI structure remains intact, short-term pullbacks can be interpreted as mere corrections, confirming that the main direction remains upward. Maintaining this trend in the RSI offers a very strong technical signal that prices can continue upward without falling below certain levels, consolidating near supports. This is a particularly advantageous structure for traders, because thanks to this positive RSI pattern, it becomes possible to enter positions early before a major price surge and later exit those positions with profits at higher levels. Another important aspect of this rising RSI trend is that it can help eliminate potential negative divergences. That is, even if the price reaches a high level, if the RSI stays at a lower level during this time, it represents a bearish divergence. However, the current ascending structure in the RSI helps prevent such negative divergences and ensures synchronized movement between price and RSI. This points to a healthy uptrend in terms of technical analysis. In conclusion, the upward trend structure formed on the RSI stands out as a highly positive technical setup. It shows that price movements have gained stability, momentum remains positive, and buyers are in control of the market. If the RSI continues to stay within this rising channel, it is highly likely that the price will continue to move upward and test higher levels. Such positive trends in the RSI can often signal the beginning of new trends, and therefore they should be monitored closely. As long as the structure is maintained, long positions can be considered. As long as the RSI holds above this trend line, the market direction will likely remain upward, and investors will have the opportunity to benefit from this momentum. The RSI trend must not be broken.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.